Thank you.
I'll call this meeting to order at 7:30. Well, we're missing our clerk, so Deputy Clerk Pearson, Hopkins. Hopkins, please call the roll.
Supervisor Eisenberg,
Here.
trustee Cassell McNally. Here. Trustee Moser.
Here.
Trustee Rubin.
Here. Let the record reflect, we're missing Elliot Robbins. We're missing Assessor Churchwell as well as Clerk Capretta. We'll now stand for the Pledge of Allegiance. Pledge allegiance to the flag of the United States of America and to the republic which stands one nation under God, indivisible, with liberty and justice for all. Thank you. Supervisors reports. After discussing the prescription drug program that I had mentioned a meeting or so back regarding the sheriff's prescription drug drop-off site, I've decided that we were not going to entertain that program. Jean had her social work intern create a list of close by disposal locations, and there's at least one in every one of our municipalities, primarily in the police stations and fire departments. And I found that was sufficient. Oh, and Julie is Vanna Whiting it for us, and we did hand that out at the wellness fair, and people were really excited to know where they could go. So that was great. So we will simply refer people to that and not have to worry about some of the concerns we had about safety.
Okay.
Yeah. Let the record reflect that Elliot Robbins is now here and the voting member. We did switch our donation process from Global Payments to another provider for the Angel Fund donations. And I bring that up because Giving Tuesday is on its way. And we had initially set that up, the online payment process specifically for essentially this time of year when people are interested in making monetary donations in addition to food donations to our pantry. Angel Fund goes both to our pantry and also to direct financial support for clients that do not meet the criteria of the equal of our emergency assistance or general assistance fund. So that is great because Global Payments apparently was charging us monthly, no matter what. So even if we had no donations in a given month, they were charging us for the privilege, even when the payment system was down. So we were not happy with their services. We did get them to allow us to break our contract, which was great. I don't know how, the contract was certainly not favorable to us. So we are now in a contract that allows that we only pay when we get a donation. So when they're actually processing a payment. So much happier with that.
And how else can people donate that will not incur a charge for us?
They can send a check.
Okay.
So they're, the information's on the website, but they can show up. And it's literally just Angel Funding, Future Township Angel Funding. I attended the Township officials of Cook County Supervisors meeting where we had an update on the decennial report process and had a really informative discussion about a similar program process that Zion Township had gone through voluntarily a number of years back. So she was fascinating about on their process, and I really found it useful. Of course, it was 10 years ago or so, and the prices have changed significantly for consultants. But I am now in touch with their consultant. They had used the University of Chicago's Harris School grad students. So we're on their radar. It's too early for them to commit. For two reasons. One is that township officials of Illinois is saying that they're going to come out with additional guidance that hopefully will make a lot of this simpler. And there's also some talk with donation cleanup bills and the general provide guidance as well. So before we go through that, we don't have to appoint our committee until next June, and then we have 18 months to complete the report. So we're really, ahead of the game. There's just been a lot of concern amongst the township officials of Illinois and TAC, I find, on this. When I brought it up to other entities that are subject to the act, they did not seem as concerned. They were like, yeah, we'll just make a report. I'm like, okay. So they really didn't seem to see it as an onerous, as township officials in Illinois was making it sound. So hopefully they, and certainly looking at the statute, it doesn't seem like we have to go all out. We can to make the most use of it. So we'll take a look and see what they say before making any commitments. I attended the assessors event with that Jan was co-hosting with Mike Cavanargi on board of review appeals, and presented ahead of time on what the township does regularly. It was extremely well attended. Obviously, people are very concerned about their property tax levels, and the staff from the board of review and Jan were really well received. A lot of people were able to do their pre-file appeal right then and there in the library, Wilmette Library. And I attended the intergovernmental meeting for the Wilmette entities, where they told us that they posted now the sustainability coordinator position. So that's that the committee had previously approved the description. So that is up on the Wilmette Village website. I shared it myself. Park District shared it as well. So that is that shared resource, primarily be shared by the village and the Park District, with a much smaller portion for us in the schools. And let's see. The second portion of that meeting was about mental health services in the community, and a lot of the other entities were did not know about some of the things that we offer. So I thought it was an extremely important meeting in that regard, and that was just the beginning of that discussion. I participated in Northfield Township strategic planning process. They used Northern Illinois public affairs group. It was very well attended as well. Ours was all representatives from various governmental entities that cover Northfield Township, which obviously have some overlap with ours. So same commissioner, for instance, Oakton was there. So, you know, as far as those people are concerned. The main takeaways really was that people want townships to focus on the core mission of social services, which is what we do. So obviously we're a little different from some other townships that also have roads districts and cemeteries and all of those kinds of other peripheral things that can be easier to integrate with neighboring local governments. And that was really what came out of that meeting, is that where that's possible, it should happen. So I thought that was a good sign for how our township is run, to be honest. Our audits, you have received a copy of our audit. Thank you so much to our staff for being amazing. This was not an easy process. I think that our first time together, going through it, you know, it was always going to be harder, but simply not knowing where things were kept, you know, last year. Remember, this is all as of last February. So when Larisha was not the administrator, right? So these were all us going back in time and trying to gather things from that time period. So not an easy task, but now that it's done, I think we're in much better shape. As an exercise. You all have the copy. I've invited the auditors to present at the December meeting. So take a moment to read through it, and then if you have any questions, that would be a good time to do so. Because I do not pretend to have a CPA. So, but they seemed extremely fastidious. So well done. And so that's online, and we posted that to our general circulation as per the rules. So if anyone needs to see that, it's available. You know, generally you just have to allow it to be available for inspection, but I thought it would be best practice to simply put it online. So anyone can get it. That is my supervisor report. Anybody have questions on that? It's a busy month.
On the audit, I don't know if this is appropriate to ask now, but I was trying to figure out if there was any indication of any unfunded pension liabilities.
I asked about them. They seem very happy with where we're at.
Good, 'cause
Yep.
I couldn't make heads or tails of it. It looked okay, but
Yep.
okay.
Yep. Given our discussions, gosh, 2 years ago, I asked that as well. They actually had some interesting questions. So, in our budget, we sometimes put a line item that we had put a line item last year for potentially paying down those pension liabilities. That we didn't do because we were told we didn't really need to. So they did ask about that and then opened the discussion as to why, that we didn't think we needed to buy it. So. Great. All right. Financial reports.
Okay, good evening, everybody. Can you hear me okay?
And you are now a host.
Great. So I'm going to share my screen. I'm going to walk through my report. We have a few things for you tonight. We brought with us some some of our investment team at some other entities to kind of walk you through what they can do for us at Sawyer Faldudo. So I'm going to go through my report and then I'm going to hand it off to Ed Lavin, who's here with us on Zoom, to kind of walk you through. I know we were looking at our investments. Obviously, we're still waiting on tax money. But I think it's always good to get another viewpoint in terms of what outside of a local bank, what kind of a managed portfolio can look like, and given somebody that's in the industry in terms of local government experience, I think it'll be really nice to have Ed as CIO of Sawyer Faldudo walk us through. So we're going to do that here in a minute, but let's go through really quickly the 8 months ended October 31. Again. If you want to look at revenues, we're pretty much unchanged. Obviously, we're waiting on those property taxes. We're at 38%. That didn't move in terms of this month versus last month. Again, at 67% of the year. Typically, we'd be higher than that now, as we should have received the second installment. But the bills, the draft of the 21 extension is out, so we were able to use that to put together a levy presentation for you tonight, which we'll walk through after Ed goes. But again, I think it's on the way. It's just the bills are starting to come out, I believe, soon. And so hopefully we'll be seeing that, through, I think they'll be due by the end of December. Property taxes, 1.2 million, so at 38%. Replacement tax still strong. Again, that's the business tax that comes in every other month from the state. We're at already more than double our budget there. So again, we've seen strong collections across all our local governments for replacement taxes. So that's good. Interest, you can see we're at 77%, so that'll most likely beat the budget for the year. But again, we want to see if we can get a little bang for our buck. Even as interest rates are on the rise, I think as we kind of look tonight on a brokered portfolio, we would see a lot better returns in terms of our reserves on hand. Passport fees already beat its budget, almost double its budget at about 15,700. So all in, we're at about 1.4 million. On 3.3 budgeted, or 41%. On the expenditure side, again, most of this we like to see trending either at where we are in the year or know the reason why. And again, across most of our major categories, those payroll related, you can see we're at exactly 67%. Most of those a little bit below. Child care services a little above, just based on timing of the payouts there. But again, pantries up, elevated a little bit just based on usage. We're at 86% there, but all in still well within the budget, trending better than budget. 1.6 million on 3.7 million budgeted, so we're at 41%. Again, not uncommon for us to be in a deficit as we wait on those property taxes, our biggest revenue stream, but we have good reserves to carry us at 1.4 million, bringing us to about 1.2 million in ending fund balance. As we look at our distribution, property taxes at 89%, replacement tax 9%, interest 1%, passports 1%. And then on the expenditure side, our agency programs at 35% of the expenditures, child care services 7%, projects 6%, contractual 6%, assessor 4%, building town hall expenses 5%, financial assistance 9%, pantry 5%, personnel 20%, elected officials 2%. Again, we're going to hopefully flip the script here soon in terms of winding down the end of our fiscal year as those tax monies come in. And again, we should continue to see operational expenditures go up with 4 months to go. I'm not going to go through all the detail here. Again, this is for you guys to take a look at percent versus budget. But again, here's what I want to have Ed kind of go through what he can do
Before
for
you do
us.
that quickly, just to note, we just skip through it. So this is ending October 31st. Know that the agency allocation second check went out earlier this month. So that will show up in your next month's report, but it'll be closer to that, that the mark you would expect to see right now.
Thank you.
Yeah, very, very good. Yeah, so again, you can see we're at about 1% in our BMO accounts. I think we are still trying to get a meeting with Northern Trust to try to see, what they have to offer. But again, this is where I kind of want to, get Ed's take on what he can do for the township today. And then again, after that, of course, we've got all of our transaction detail by account. This is our expenditure listing for the board to approve. And the total here is on page 6 of about 127,677.53. But with that, if it's okay with the board, I'd like to hand it off to Ed. I'm going to bring up his deck here for him to kind of walk us through his firm and kind of what they can do for the township.
Before we do switch, I just want to see if there's questions on your report.
Oh, yeah, sorry. If there are any questions on my report, yes, please feel free to ask them.
Trustee Moser?
I'm looking at the reconciliation of the BMO checking account, which it's only got page 1 on it, but it's kind of in the middle of the packet. And I noted that there are 6 deleted names for checks, but the checks were still deducted from the gross amount of the numbers. So my question is why?
Oh, you're looking at, we had those redacted for privacy.
Oh, that's what I'm asking.
Yeah,
Yes.
you're looking at the blackout?
Yeah.
Yep, those are just redactions we were concerned. Their constituent name. Yeah.
Okay.
Yep.
It just seems weird that.
Yes, but we are happy to provide it
Did we ever,
unredacted for
did
you.
we ever deduct anything previously? I don't remember doing that.
We also didn't post,
I'm sorry.
we didn't post the packets previously.
Okay.
It's the grand balance of transparency and privacy.
Okay.
Okay, if there aren't any other questions, I'm going to hand it off to Ed here. And I'll handle the slides, Ed, because I'm sharing the screen here. So just let me know when you need me to flip the page.
Great. Thanks so much, James, for the introduction. Again, my name is Ed Lavin. I am with Sawyer Felduto Asset Management. We're an independent asset management firm based in Elmhurst, Illinois. It's a pleasure to speak with you today, this evening. I had a chance to peek at your agenda. It looks like you've got a lot of things on the agenda. So I will hit the high points with regard to Sawyer Felduto, and then specifically, how we interact with governmental entities like yourselves to achieve desired investment outcomes. So with that being said, we'll move to the second slide here. Again, Sawyer Felduto, Elmhurst, Illinois. Our 2 managing partners are Tom Sawyer and John Felduto. The firm's been around since 2007. And specifically, as noted here, we really focus on working with, partnering with governmental entities. So as noted here on the page, we work with 33 Illinois fire protection districts. We have relationships with 22 municipal/park district clients. And then we have relationships as well with over 150 Illinois fire and police pension funds. We have $1 billion under management, so we have scale. And we're proud to say, too, that we've got 100% municipal client rate, meaning that of the clients that we've partnered with, we've not had anyone leave us yet. So we're very proud of the customer service that we're able to deliver. Move to the next page, James. I think the key thing to take out of this is at the top here, we're a registered investment advisor. So we're subject to all the statutes and regulations as propagated by the Securities and Exchange Commission, which is important. I think equally as important here is this bottom section is we are completely independent, meaning that anything we do is really our own discretionary choice, or we're not beholden to any particular brokerage firm. We don't have to trade with anyone. We act as a fiduciary for all of our clients, meaning that we act in their best interest. And so when we buy and sell securities, we do it such that they get the best outcome possible. And the bottom point here is important as well, too, is that we don't accept fees from anyone other than our clients. So we really provide an unbiased approach to investment management. Again, not accepting any fees from anyone on the outside. move forward, James?
There's a question from trustee Moser.
If I read this correctly, you do most of your trade and activity through Schwab, is that correct?
No, not exactly. What we do with Schwab serves as our custodial platform. So all of our clients establish a custodial account. So it's essentially an account to hold the assets. It's in their name. They own that account. We are then authorized to trade on that, but we have multiple broker relationships throughout the investment community. And so when we trade, we're going to try and shop around and get the best deal for our clients, whether we're buying a security or selling a security. Sometimes it is Schwab, oftentimes it's not.
Why do you have to do that with Schwab and not the
Pardon me?
other brokerage? Why do you have to have that arrangement with Schwab and not other brokerage houses? then?
Because Schwab again serves as our custodial agent. Again, that goes back to the business model we established back in 2007. Again, all they do is custody the assets. We're free to trade with anyone we want. So we trade with a lot of names that you would recognize if I told you, and some of the smaller boutique shops specialize in the types of assets that we deal in.
But they are the custodial account for the township if we sell. If we sign up.
Yes, Schwab would be, yes, 100%. And that's your account. It's in your name, correct?
So then my next question is, with regards to insurance and protection of the assets, is that on you guys? Is that on Schwab? Where does that come into play? And how much do you have?
Well, that would be with Schwab. Again, we have our own insurance in the form of like directors and officers, errors and omission type of insurance. But again, it's a custodial account, so the relationship would be between you and Schwab as the custodian.
Thank you. I'll have more questions. Go on.
Okay, thank you. Page 4, as you're looking at here, again, what I want you to take away from this is that we have a disciplined and repeatable approach, and the most important part of the slide is really the centerpiece there. We work very closely with all of our clients to understand what their investment objectives are, and that really includes what's their time horizons, what are their funding considerations, what's their risk tolerance, cash flow needs, liquidity needs, and certainly the regulatory environment, which we're very familiar with. Once we establish those and ensure that we're aligned on what we're trying to achieve, then we really begin the process of investing the assets. And this really ends with the feedback loop where we're meeting with our clients on whatever periodicity they prefer, whether it be board meetings, ad hoc meetings, et cetera, to ensure that we continue to be aligned on how the investment process is supporting their overall investment needs. It's a little bit deeper dive into fixed income management. I won't go through this, but suffice it to say, we take a very disciplined and diversified approach with regard to how we're going to invest the assets. Again, a lot of it's predicated on what the client needs are. Are you saving for a particular funding need? Is that 1 year away? Is that two years away? Et cetera. So this kind of highlights that in a high degree. But again, we have a disciplined and repeatable process that we follow when investing for clients. This gets into a little bit, and we touched on the Schwab account. This is the custody and safekeeping that we talked about. We think this is an important aspect of what we do. You as a client would want a third party to custody your assets. You receive statements independently from Schwab. You have online access to Schwab. So every single day, if you chose, you could look at what your balance was. You could see what transactions have occurred, et cetera. Again, we would be authorized to trade on that. We would also provide you with our own set of reports. But again, we would want you to have that third-party validation and verification that your assets are being custodied by a third party. This is something we put in here. A lot of our clients like this. It's called MoneyLink. It's a function that Schwab offers. What it essentially does, it creates a closed ecosystem, if you will, between the Schwab account and an operating bank account of your choice. And when I say closed ecosystem, what it's meant to do is prevent any fraudulent activity. So once this is set up, it can only move money between your Schwab account and your designated operating account. It can't go anywhere else aside from those two things. So again, it's a safeguard measure to ensure that there's not a rogue request to try and move your money to some third-party bank that you don't know. This keeps it, again, in a closed system here. So again, we have a lot of clients that use this to move money between as cash flow needs develop, either putting money into Schwab or withdrawing money out to fund operating needs.
Yeah, and I'd just like to just add one point here. This is really nice. So we could basically link our BMO accounts to the Schwab account and that way transfer money pretty seamlessly so that when the taxes come in, let's say, they can start to make money right away. We can invest that money right out of the gates with Sawyer Falduno managing that money for us.
Good point. The next thing is, what you see here is we label it reporting and attendance, but really it's meant to just be a representation of the full suite of services that we provide, starting in the top left-hand side. So I mentioned that you're separately going to get information from Schwab, but beyond that, we're going to provide you with a whole set of reporting reports. So cash flow summary, performance review, looking at it from inception to date, looking at your allocation versus policy, et cetera. On the upper right hand, as noted earlier, you will separately, independently receive statements from Schwab. Again, that's an ability for you then to verify everything we're telling you is being also represented in the Schwab statements. You have online access as noted there on the bottom left. And then as importantly on the bottom right there, we're happy to participate in your finance committee meetings or board meetings, confirm your investment objectives. We can go over the performance reports. We often discuss what's going on in the economy or the financial markets. And again, we could do that, at whatever periodicity the board and trustees are comfortable with. So that being said, again, what we have here then is our fee proposal. And the first thing I always want to say is that the fee you pay us, this is the only fee. We take care of the fees for custody and the assets at Schwab. The only fee we get is what's noted here. And as represented there on the bottom of the page, it's 20 basis points. So that's 0.2% or 20 basis points. And that's calculated quarterly. So it'd be 1/4 of that or 5 basis points based on the market value of the assets. Again, there are no other fees associated with it. Again, we cover all the trading fees, the custody fees at Schwab, et cetera. We really want to support transparency and simplification when we deal with our clients. So everybody knows up front exactly what the fee is and how it's calculated.
I have another question.
Yes.
If you buy into a load fund, who picks up that load amount?
Can you further explain when you say a loan fund?
The funds that have built-in expense or charges as it relates to the fund specifically.
Yeah, that would net against your asset value then. So that cost would be borne by the client if we did something like that. I would tell you more often than not for this type of account, we're directly buying bonds. So aside from the transactional cost that we absorb, there is no additional fund charge for individual bonds.
So you don't get into any mutual funds or?
We certainly could, again, but being mindful that, again, the statutes that govern what we can and can't do here, we have found it most advantageous to deal in individual bonds.
Okay.
But we could do funds if there was a request. We often get a question as seen here on the page, how difficult is the account transfer process? I would tell you we do all the heavy lifting. We just get a little bit of information from you up front. We pre-populate all of the forms. We would show up at your meeting with all the forms ready for signature. We would walk you through that, get the signatures where necessary, get you a copy of the forms. And that would be the process in terms of, initiating a transfer and getting your account set up at Schwab, along with the agreement with Sawyer Falduno Asset Management. So again, we would do all the heavy lifting. We would just come to you for signatures and certainly be available to answer any questions you had along the way.
And the 0.2% that you
Yes.
charge for fee is based on the gross value of the account, regardless of how those assets are held.
I would be the gross value of the assets that we manage on your behalf.
Okay.
Ed, Elliot Robbins here. I would say, our case is very easy. We have zero risk tolerance. Capital preservation is anything and everything for us. That's where we begin and that's where we end. We just want to take advantage of these 4% and 5% rates that we're starting to see on short-term bonds and short-term treasuries. That's it in a nutshell.
All right, that's a perfect segue, and I'd be happy to take you there. So the one thing I'll just pause for a second here on page 13. You keep going, James. What we like to do is this is a list of our 22 clients that are in the municipal library park district clients. We don't hand choose, which clients we ask you to contact in terms of references. We give you them all, and you'd be happy, we encourage you to contact any and all of them. Similarly here, the next page, these are all of our fire protection district clients. There's 33. Again, similar, we give you the entire list. And then lastly, we end with a list of all of our pension clients that are in the police and fire space. So again, we don't try and hand choose who our references are. We give you a list of every single client that we have, and allow you to, to the extent you want, you can go ahead and reach out to those clients. With that being said, I'm going to move to page 22, and this gets maybe a little bit more directly. If you go up a little bit, James, thank you. Gets a little bit more. So this is as of yesterday. Again, we're in the market every single day trading accounts like yours and other accounts. You can take a look at what the yields are. So I'll just use 1 year yields for a moment here. That's the second line item. So in the treasury market, 1 year yields yesterday were 4.63%. We could buy institutional CDs. So again, those are different than what a retail buyer may get. You see that's 4.7, so a little bit more yield. Agency bonds, so these are U.S. government bonds issued by agencies of the U.S. government. That's 4.64%. We could buy some municipal bonds. That would be 4.73, or some high-grade corporate bonds would be 4.71. So I would tell you the yields you're seeing here, this is the best we've probably seen in the last 15 years. So this is a great time to have this conversation, and very opportunistic time for the township to be considering looking at alternatives to what's available just in cash. So if you move forward to the next page, James, what I did is I took the liberty to put together 2 sample portfolios. So this is the first one. Using some of the information that James had just presented with regard to your investment holdings as of October, it was a little over $2 million, $2,088,935. Using the Schwab government money market fund that's available to us is currently yielding 3.3%. So if we put this money to work in the money market fund, which is a low risk daily liquidity fund, as noted there on the far right, your estimated annual income would be just shy of $70,000. It's $69,652. Net of our fee, that's the 20 basis points I referenced earlier, that would yield $65,384. And so
question on this money market fund, which is very attractive, and like you said, historically, this is the best we've seen in about 15 years.
Correct.
Is there any limitations on the number of checks we can write, or on the liquidity that we can have from that money market fund?
No.
So we could, our township could move money back and forth in and out, write as many checks as we need to without penalty.
That's correct. But typically, and I'll look at James when I say is what we've done in the past with most clients is that they would move money out of here into your BMO account and write the check out of there. But you could write a check directly out of here if you so chose.
See, when I look at this and compare it to the 80 basis points that Northern Trust or that BMO is giving us, I mean, we're nothing but best stewards of taxpayer money at this precise time. And this is very attractive to me.
So what I try to do here on the bottom then is just kind of using the information I saw available in the James's report. I looked at what your average weighted yield was. I calculated about 82 basis points. And so as noted here in the bottom table, that generates a little over $17,000. The net that you would generate if we had that and put that to work in the government money market, again, was the 65, and I noted. So your net gain annually is about $48,254 under this proposal. Again, that's the money market. That is, a very straightforward transaction for us, one we do all the time.
On the 20 basis point fees, how long have you guys been operating with that business model? Has that been something you've held for a long time?
The 20 basis points?
Yeah, the fees, your institutional fees, how long have you guys been at that level of fee?
We've been at that level for some time. It was for quite a while. And we guarantee that fee too. So we don't raise that fee. So if John Felduto were here, he'd tell you in the paperwork I shared with you, it's guaranteed for 3 years. John will tell you that he'll guarantee it for as long as you want. So we're not in the business of raising fees on people once they become a partner of ours. The next page just provides just a slightly alternative view. Again, I took the same dollars that we talked about, and what I did here is I created a laddered portfolio using U.S. government notes, and I have 3 months, 6 month, 9 month, and 12 month in equal increments. Again, you want to be mindful of cash flow needs, but again, this gives you a little bit higher yield profile. Kind of jumping down to the bottom there, that green line. So your total portfolio on this would be earning 4.5%. Again, this is based on yesterday's yield. So that would give you a total of 93,960. And again, in a high quality, it's a US government portfolio. Again, net of our fees, you'd be net, net 89,784. And relative to what you're currently earning from the bank sweeps, that's an incremental pickup of about $72,600 and change. So again, yields have jumped up dramatically, really in response to the Federal Reserve and the battle with inflation. So there's certainly money to be made on relatively short-term yet high-quality investments in the marketplace.
You would agree that the treasuries have gone down in recent days, correct?
It's come off a little bit today versus what we took from yesterday. Like by maybe 9 basis points, but it obviously it fluctuates. That's why I'm always very, very clear to say this was as of yesterday.
And conventional wisdom is now that even though the Fed rate's going up, there's a strong possibility that the overall rates are going to fall. Is that your understanding or not?
Yeah, I mean, we follow it every single day. Again, the market trades in anticipation of what's going to happen. The yields you see now, again, are really predicated on the Federal Reserve raising rates, probably 50 basis points at the December meeting. And again, in the first meeting in January or 2023, and then it's anticipated they're going to level off. To the extent they do something other than that, you're going to see the yields move, but that's currently what's baked into the yields that you're seeing.
Thank you.
So that really concludes, this is just a sample report. Jamie, you can kind of just scroll through this. This is, one of the reports. Just wanted to give you really the breadth and scope of the type of information that we provide our clients, really beyond what you'd be getting separately from Schwab. But again, we're going to provide you cash flow. We're going to break down the bonds, if you have bonds, list all what the holdings are, what the yields are, et cetera. So we want you to be comfortable with what you hold and what the projected earnings on those are.
Great,
Can I ask another question?
wait,
I noticed in your sample report, you're showing a typical portfolio and none of the yields on that report, there's one 3.5%. Everything else is much smaller yields. And so I'm trying to understand page 29.
Yeah, if you look at the date though on the bottom right, this report's from December 31st, 2020.
That's what I'm asking.
Yeah.
So that's not really a valid report for us to look at because it's not current, correct?
It's valid with regard to the breadth and scope of the information that we present on the reports. The information itself is not up to date per se, but that doesn't change the scope and breadth of what we provide on the reports.
What a report would look like. It's not the numbers necessarily, obviously, that would be.
Exactly.
Thank you very much.
Thank you.
Thank you. We
Yeah, and I appreciate
your
that.
time.
And obviously love to earn your business and work with you and partner to make sure that you get the financial outcomes that you're looking for.
Thank you, appreciate it.
Okay.
Thanks, Ed.
Feel free to reach out with questions, but with that, I'll dismiss myself from the meeting. But again, I do thank you for the opportunity to chat.
We appreciate it.
Thank you.
Thanks,
There's
Ed.
nothing for us to act on at this time. I know I will probably want to call a couple of the municipal clients. And if there's anybody else you'd like us to consider, please let me know. And then we'll determine if we want to put something on the December agenda. I will reference a note that we do have a investment policy that was passed, under a previous board that I did have placed on our website when we were discussing this process, so you could see what has been adopted. So you can take a look at that. Ellie, it's pretty much in line with what you were saying. Yeah.
And I just want to follow that up by saying that I think we've been doing a great job over the years in terms of monitoring the numbers and trying to get top value. But things were so flat for so long, and now we face a historical change.
Yep.
And I do think it becomes our duty now to suddenly become a little bit more proactive, to protect our taxpayers and to get maximum value. It's not like we haven't been doing a good job, but things have changed very suddenly and better.
So the next part of our business is the
Wait a second, Gail, are you suggesting that we're gonna delay the discussion of this until the December meeting?
there's nothing on the agenda for us to discuss.
All right, well, I have concerns about it. Do I express those now or do I
Sure.
wait until December?
You can express them now.
All right, so I think that there are several things in my mind, and I looked at this very closely. First of all, I think it defeats exactly what we're trying to accomplish. And what I mean by that is, what I was looking for was more diversification of our portfolio with different institutions, so that we weren't only obligated to one particular or two particular institutions. What you're doing here is you're consolidating everything not only to one group, but basically to one institution. And I think that that is not what we're trying to accomplish. And this is my opinion, guys. You can disagree totally. Also, I don't think it's the objective of the township to necessarily go out and make money on our money. That's not what we're supposed to do. We're supposed to be prudent investors. And if we go out and shop a little bit, I'm sure that we can get some comparable rates. Another point is that if you start talking about treasuries, those are timed instruments. And then now you've taken your liquidity and locked it up. So I don't think that that's a good way to invest. You're also paying these people, and it's a very low rate. I have to admit, 0.2% is a very low investment rate, but it's still 0.2% that we would not otherwise have to pay. And we have a great new group doing our financials. And I'm not sure that we need now a second group to in effect in some way duplicate what the other group is already doing. And I just think that the other point that I want to make, and I'm going to bring it up later when we get into the agency stuff. We can't have more money than is appropriate in our accounts because it's not allowed by statute. So the idea of making oodles more money is counterproductive relative to our obligations under statute to keep our numbers down, not up. So I think that while it's all well taken, I, for one, am not at all in favor of going this direction with our investment portfolio.
Appreciate that. And I will say, we're not even close to the statutory limits on town fund. What are you referring to?
In the past, before you were on the board or anybody was on the board, we got sued very often because we were carrying too much money on our books. And it hasn't happened in the past few years, fortunately, but that reality is still out there and we are limited. And I don't know the numbers. I'm not that familiar with the specific numbers, but I do know that if we carry too much money on our books, we're subject to taxpayer
Right.
response to it. And so I think we're very close to those numbers.
We're not even close. Not on the town fund at all. For general assistance, that, yes.
Okay, well, whichever way it goes, but I don't
That's
think
why
that
we've
our
been
numbers are
spending more,
dramatically
yeah.
different from when we used to get sued, so I don't understand the disconnect, but I could learn. If you can show it to me, I'll listen to you, but that's a concern of mine, and I'll bring it up later when we get into agency applications, but I just don't think this is what the township needs, and I don't think we need to add a new layer of involvement from an outside company, which we're now paying money to maximize the money we get back when we go out and either shop the market ourselves or basically continue doing what we've been doing. I don't see the need for it.
Can I ask a question based on this? I didn't hear anything in Ed's presentation indicate that we would have to put everything from our accounts into a new account.
No.
So I am not as concerned with the concept of putting all the eggs in that basket. I just wanted to be sure that I wasn't missing that.
I heard it the same way as you, and I saw it as more of, we thought we were, we have our operating accounts, we currently have basically our reserves accounts.
Right.
And the reserves account sitting there not doing very much.
Yeah.
We can take at least part of that reserves account, if not most of it,
Mhm.
and invest it in some way, shape, or form.
Right.
But it wouldn't be, and the custodian in that case is Schwab, but it's not invested all in Schwab.
Right.
So-
And I was intrigued by the fact that notwithstanding that Schwab is the custodian of the account, that they are not bound to use only Schwab products. And that, they can shop around to, others. So I'm
Yeah.
and I also want to make sure that governmental accounting isn't already doing this for us. So it's not actually duplicating the work of governmental accounting. This would be an investment strategy, not just an accounting strategy. And, you know, I might understand, you know, and I could be very much wrong on this, but I might understand our fiduciary responsibility to the taxpayers differently. But I was under the impression that it's not just holding the money in a shoebox and then divvying it out. But, you know, if we can, you know, in a prudent way, make money on that money and then, you know, put that to work in the community. You know, so long as so astutely mentioned, that we have absolute tolerance. That, you know, I was, you know, I will be interested to see and hear what Gail finds from, you know, talking to some of the, you know, kind of current customers. But I think that if there is a way to, in a prudent way, be better conservators of township assets, that I'm interested in, you know, looking into that. You know, we've been saying for James for months now, you know, we got to do better on that, you know, 0.05%. And he's brought us, you know, a way to potentially do that. So, you know, I do not have that wherewithal. I have no idea what I'm doing. And so I am comfortable with the concept of paying experts a modest amount on a, you know, a quarterly basis to do that, because I don't know how to do that, and I am not in a position to take the you know, tax money from the township and do that. So, you know, you say we can do that. I think that this is how we do that. So,
Right,
But-
as a statutory treasurer, I agree with you.
But you're also putting all your money, whatever portion put in, to a custodial account with a particular institution,
Mhm.
okay? If that institution failed, and I asked this question, where did the insurance come from, and how much is there, and I didn't get an answer. And I'm concerned that if Schwab fails, we're out. And historically, big firms have been failing. Bear Stearns failed, a few others failed along the way, and I think it's not a good idea, in my opinion, to rely on one institutional company to be our custodial holder. That's and I do deal with custodial accounts a lot, and I do deal with a lot of institutions a lot, and I think it's just a bad idea.
Just to that point,
Oh, please.
sorry to interrupt, just to that point really quick. Typically, you know, obviously safety is paramount. So when we go out to build a portfolio, we can tell Sawyer Felduto, we want to stay within the FDIC limits. We want treasuries, things that are backed by the full faith and credit of the US government. So we know that we're insured up to that amount, 250,000. We can break it up that way in order to make sure that we've got full insurance on all those investments. And that's a lot of what we look at when we build this. It's very much a fixed income portfolio. You know, we're looking at short-term treasuries, we're looking at CDs. And again, we can break them up into $250,000 increments to get that full FDIC coverage on those investments. So that is part of what we look at when this gets built. And the board would absolutely have buy-in to the portfolio and what was being invested in, and they will come out because we do have some, we do partner on some clients. They will absolutely come out and give the board a presentation to say, okay, here's what you own, here's how it's protected, here's the money you can make on it, just like you kind of did tonight. So that's definitely a walkthrough that you will get before anything is started.
But if Schwab fails, what happens to our money?
So under the Securities Investors Protection Corporation, which is the FDIC equivalent for brokerage accounts, we are insured up to 500,000 per customer.
And Schwab isn't holding the money, they're kind of the
I
clearinghouse.
know
Stephanie.
what a custodian.
So on the 3.33%, that very attractive money market fund, which would eliminate your concern about liquidity because it's not in a tied up in a lengthy treasury. 3.33, that's a government money market fund. Schwab could fail, but those funds could still be preserved. One that they're in. We're not investing in a Schwab fund, we're investing in a separate fund. And you know, right now we've got our eggs in BMO and we've got some at Northern, and those large institutions are subject to the same risks that Schwab is.
Yeah, but my argument for months now has been get into more institutions so that we're not exposed on any one given institution. And that's what I think we're going back into, so.
But I think we can get into a bunch of institutions through Schwab. It becomes very
Through
difficult,
Schwab,
Yeah.
again, it's all through one company.
but we're
You
not,
wouldn't have to
we're not
put
subject to
everything
the-
in Schwab.
the thing is, we also have to balance the, we have to balance the amount of work involved. If Larisha, for example, has to juggle 5 separate accounts here on her own, I mean, there's a lot of time involved in writing so many different checks and dealing with 5 different banks.
I accept that.
That would be a way of getting your eggs in a bunch of different baskets. If through this Schwab managed account, we can go in a bunch of different directions and have everything consolidated, it might simplify the accounting. And getting back to the being good stewards of taxpayer money, I mean, I think when things suddenly change and there's opportunity to get better returns than we're getting, I think we might not be living up to our duty if we're not taking advantage of prevailing rates. Yeah, if we can suddenly create without risk, $30,000 or $40,000 extra a year from what we're doing right now. Imagine that the scholarships that we could fund, imagine the additional checks that we could give to our neediest citizens. I mean, that goes straight back to the community. I think we, at some point, we have to take action, and if we don't take action, then I think we're perhaps being derelict in our duty.
I am not against taking action. And if you're gonna talk about exposure, the fact that you have had funds in one institution for several years now was as great a liability as what you're talking about in terms of making more money. So you can't have it both ways out there. I mean, that's why I've been pushing to diversify our portfolio. I'm the one who said, go out and get more accounts from different institutions. And I don't see that is accomplished.
I do think we can diversify through Schwab. Schwab is not on the hook for all that money. It's depending where it goes through Schwab. Schwab's like a clearinghouse. I think.
So seeing a repetition in the discussion, we'll move on. We do not have anything to act on at this time. When and if we do, we can continue the discussion. All right, proposed tax levy. James will continue on that portion as well. As you all know, we have to, I won't do this under too much, but this portion today, we just have to decide on what to put in the notice. We're not agreeing on the tax levy itself. There will be an open public meeting. We have to notice it in the newspaper. So today's decision is not a forever decision. It's, kind of the indication of what the board is thinking. All right, James?
Thanks, very good. So yeah, tonight we kind of make a determination, so to speak, if we are going to go above the 5% based on truth and taxation, then we would have to put a notice and have a hearing. But again, just to bring up some discussion points and obviously how important this is, it makes up 97% of our total revenue. We're in a very unique situation with CPI. And again, this is a December to December look back. So December of 21 to December of 20. CPI was 7%. So again, very high inflation, very high CPI, and we're going to get capped back under PTEL to the lesser of CPI or 5%. So again, we're going to get capped back to 5% if we go for the maximum. EAV right now, we have an estimated increase of 3%. It could be more than that, but based on our current model, we kept it fairly conservative. And again, that will just affect our rate. It doesn't affect our ask or what we can get under the tax cap. New growth at 30 million. Again, that's a 3-year average that we put into the model. And again, right now, basically we're lower than the 5%. So we're not in terms of our current models required to publish or have a hearing because if you're over 5%, that's what triggers that publication. But again, right now, we're not seeing that as being part of the current model. Just to give you, again, just a quick history of a 5-year look back just on CPI. Remember that usually hovers a little under 2% if you were to look at like a 10-year average. Last year, it was 1.4. So again, that's how unusual this is. We haven't had this high a CPI since the tax caps were instituted. The highest we've had is 4.1, and the following year it was 0.1. So again, that was when the recession hit back in 2007, 2008. In terms of new growth or new construction, you do have a lot of that going on. And again, that's what the 5-year trend looks at within the township. So again, you can see a little bit under 25 million last year, but it's been much higher than that in previous years. If you look at the relationship then down below that in green, that's our rate at 0.069 for last year. And again, we have that inverse relationship between the EAV and the rate. Obviously, the formula on the tax rate is the extension over the EAV. So as that EAV rises, the rate is going to come down and vice versa. As the EAV decreases, the rate goes up. It doesn't necessarily mean we're asking for less or more. As typically we ask for a little bit more every year to keep up with inflation. But again, that's just the formula on the tax rate itself. This is a 2020 tax bill. Obviously, I didn't have a current tax bill to look at, but again, we make up about 0.8% of this individual tax bill. Again, probably one of the smallest portions outside of the mosquito abatement district. The schools are typically up there in terms of anywhere from 60 to 65% of an overall tax bill. And again, for us, taxes are important just because they make up our #1 revenue stream. Here's kind of what we looked at in terms of the draft extensions that we did receive for both the town in green here, GA in this reddish color. And then again, remember, we had a new public act that came on the books in terms of a revenue recapture. So we did see about 38,000 there. And again, we were able to capture about 4.5% over the prior year's extension. Now that is inclusive of this non-cap or addition that the county puts on now under the PA 1020519. So again, you didn't levy for this. This was put on by the county. Your levies are up here. And again, your town levy was up about 3.4%. And down here, your GA up about 2.8. So again, I think historically, if you leave the levy flat or right around the prior year's extension, what happens is the county's going to tack on 3% for loss and costs. So that's common across most Cook County local governments. Unless you, by resolution, decline the loss and cost, they're going to bump you 3%, just saying that you're probably not going to collect every dollar. So they're going to take you up by that percentage. Down here, you can kind of see the EAV did fall 8%. The prior year it was flat, it was up 6%. So again, that's the typical pattern on reassessments every 3 years, is they'll go up. And then after that, objections start to happen and come in on the valuations. And so that'll start to come down quite a bit after the reassessment year. So we put together 3 options for tonight. And again, all of these options do not have us going over 5%. We put together the first option where our funds would equal the prior year's extension. So the levy request would be here in yellow at about 3.28 million. We would get the 3% bump from the county, and then we work it through the tax cap model to see what the cap would be here. We're not getting reduced, obviously, with a 5% CPI. We're not going to get capped back because we're going to be under that. So again, what we basically get bumped up by the county by that 3%, we're going to receive. So 3.38 million would be the total extension for both town and GA. Again, no publication. We'd actually be less than the prior year's extension because of that new public act money that get put on, based on that revenue recapture on those assessments. Again, it would then produce about a 3% increase. So again, our levy is flat or equaling the prior year's extension. 3% gets tacked on by the county. We get to capture that because we're not above the 5. So again, we get about $98,500 approximately in new money. The next option. Go ahead.
That 3% that you're saying that the county imposes, have they always imposed that 3%?
Yeah, they have. Unless you decided by resolution to say that you didn't want it added on, they will always tack that on. And I'm going to show you your draft extensions from 21, just to kind of show you the county model, which is pretty much represented here. But yeah, unless you decide you do not want that added on, they will bump you 3% every year.
In past years, we've always, for general assistance, we've kept it flat.
Right.
And I recall asking Diane, why do we still get more money every year. It's just like the county does what it wants. I never knew about this loss and
Loss,
about
yeah.
loss and cost concept. So we were getting some sort of notice saying if we don't say no to this, you'll get it. Is that what's going on?
So you're automatically gonna get it unless you decide you would rather by resolution not receive the loss and cost percentage increase. And so it's
How often does
3%.
that, how often does that happen with your municipal clients, James?
Never. No, not many at all will say, I don't want the 3% loss and cost. And that's why, you can levy very little in most years and capture, on a 1.4 CPI, you can leave the levy flat and you'll get the 3% bump and capture everything you could under the cap, because you're gonna get capped at that 1.4 plus any new growth. And if you have very little new growth, a lot of Cook County entities will just keep the levies flat, even though they're not flat because they're getting the 3% bump.
Interesting.
Is that 3% the replacement tax?
No. Replacement tax is the business tax put on by the state, not the county.
Do you have a recommendation, starting to get a feel for our funds and our reserves? Do you have a recommendation? Typically, we would have asked Diane for her recommendation. What would be your recommendation of these?
You've got two more options.
I mean, of these three.
Couple more options to take you through real quick. I wanted to show you what a 3% over the prior year's extension would look like. So if we take the levies up 3% over what the extension was last year, we're going to get 3 plus another 3 because you're going to get the loss and cost. And what that's going to do is we're going to ask for about almost 3.4. We're going to get bumped up to almost 3.5, and then that's going to go through, but we are going to get capped because now we're at 6%. And again, the cap is 5% typically, plus the new growth and what we can capture. So again, 3.47, we are going to have a PTEL reduction. Again, that's the property tax extension limitation law. That's going to cap us back to a factor of 0.9963. So in this scenario, we would receive about 187,000 in new money, and again, a 5.7% increase over the prior year's extension. The last option, I know that this was something that I think had been done in the past. It was to go to the CPI in the town fund and to leave GA flat. And so that's what we did in this scenario. We took the town fund to 5% based on the CPI or the cap. And then GA we left at the prior year's extension. This almost amounts to the same scenario as option 2. About 187,000 in new money. We asked for about 3.4. The 3% again takes us up to 3.5. It's just now we're leaving really GA flat and the increase is coming in the town fund. So again, about 3.5 million there, almost the exact same new money as well as the increase almost identical at 5.7%. Again, in all these scenarios, we do not have to publish or have a hearing because we're not above the 5% in the ask or in the levy, that yellow box figure. But given the 3 scenarios, I think in my mind, we are in good financial health. So I think the board, we're also a very small piece of the overall tax bill. Knowing that we are going to be dealing with inflationary costs, to operate, and as well as if there's any, capital or expansion needs that we may have, and also that we always base, on the prior year's extension. In my mind, I like option 2 or 3. I think we should look to gather a little bit more in terms of money. I think option 3 might be best just because we know GA has kind of an inflated fund balance as is. But if we're going to need some capital project money to do some bigger things at the township, that would kind of be my recommendation. If the concern is on the residents, and again, we don't have a huge overall impact to the tax bill, then option 1, that's going to cause the lowest amount of increase to a tax bill, basically.
Questions for
So,
James?
Yep.
No additional questions? What about doing a hybrid 2-3? So 3% on town funds, GA, hold steady.
GA flat, yeah. Yeah, that's another option as well, and I can run the figures for the board and bring that back.
I appreciate that.
Can you repeat that, Gail?
So town fund 3% over extension, 0 flat on the general assistance. Because we are seeing it's very much increased cost on food pantry, and I would like to increase that for next year's budget. The line item, as you saw in James' report, we're high in our, as far as to year to budget. And not overly concerned this year, because that's why we have Angel Fund, but, that we can supplement, and that's what it's for. But, going forward, if inflation stays this way, I'm concerned.
When we've just been through a year where we've had unexpected costs in the building itself.
Right.
And even if we are not intending on doing any repairs, Larisha can tell us all about it.
Right now.
Yeah, so.
But I'm also concerned about our taxpayers, and I agree, they're getting hit too.
Yeah.
Could we maybe look at a hybrid of option 1 and the option, maybe 1.5% instead of 3%, somewhere between option 1 and option 3?
So noting that I'm just looking back at the CPI, and our tax rate, because we had traditionally done the CPI, in the past years. Which was obviously a lot lower. We're not going to 7%, it's obviously can't, but, the concept is our costs go up, so will our clients.
I have a question. Last year, we kept the increase very low. And then inflation kicked in pretty heavily this year.
Sure do.
So we didn't come up short though, right? I mean, it didn't really ultimately impact it.
Well, we're way over budget. We will be over budget on food pantry. We will be over budget on food pantry at the end of this year.
We're about 82% right now, we should be at 66%, so. Yeah.
So exactly where you would think it would be, right?
Yeah, but on the overall picture, I mean, you're not,
Right.
that's a small little,
Well, so our salaries were set, right? Contracts were set. Those aren't gonna change.
I was just curious if.
Yeah.
How we,
Yeah, the most of our inflationary issues are gonna be on food and supplies, right? And then theoretically also in recognizing the impact of inflation on our agencies, will then ask for an increase next year, right?
I was gonna wait, but let me throw it out now. The word I'm hearing is that the agencies are very possibly going to cut several of the programs that we currently fund. So if that were to be the case, then we've got extra money coming in from there as well. And I wonder how that plays into it. I mean, I've heard that consistently now, you're just not here. Yeah, but
Looking at Brian's report, that was his indication, but we haven't gotten the committee reports, the committee recommendations, and obviously haven't voted on anything.
okay, I'm just
Right.
trying to anticipate.
Yes, but that's a good point, that there could be additional monies available from that.
So can we wait and make a decision on this until we have more of an idea of how we will be funding the agencies?
Generally not,
No.
we have to publish this, hold on. Nope, our journal.
And also, we budget for a deficit,
Right, we do,
but we've never had a deficit.
true,
So even if the food pantry costs are going up, we've still got enough money in the pot to cover everything and still not hit the deficit that we always budget for. So I'm just trying to keep a realistic handle, given your comments about the public and tax dollars, is how much we really need.
And it seems like the difference between option 1 and option 2 is about 88,000. So that's what we're really thinking about.
In option 3, it's between 1 and 3, because 2 actually has general assistance. We don't need to bump that. I wouldn't mind seeing, as a final proposal, a hybrid between 1 and 3. I mean, I like 3, I like 1, and maybe something in between there, so we can always say that we did not, you know, that we did give consideration to the taxpayer. I think our percentages crept up. I mean, way back when I remember, New Trier Township was about half of 1% of the tax bill. And this document is showing we're creeping up to about 0.8%. I certainly want to keep that in mind too.
Yeah.
Every little bit helps the taxpayer. We have a lot of things we have to balance, and I certainly see the food pantry on the increase, which I think is great. It's a robust program. We're using it. You know, but by the same token, agency requests may plateau or might even decrease, but new agencies may come into the fold too.
Right, we have 2 new agencies this year. What are you seeing, you know, this is the beginning of this levy process. What are you seeing from your other clients, James?
You know, it always depends on the financial position of the township, or, you know, in other local governments too. You know, they're getting hit, like for fire districts, for instance, they're getting hit really hard with inflation on vehicles. So like a vehicle that used to cost $650,000 now costs $900,000. So those types of entities are trying to, you know, do the same thing as the board, which is balance impact to the residents with the future need for kind of capital projects and offsetting inflationary increases. So I don't have a good answer for you. What I would say is that a lot of them are going to the 5%. And I think the reason why is they feel that there is a recession coming. And if we do see a recession, typically, and CPI is different now, but typically the CPIs will drop fairly precipitously, and you will go back into a very low CPI environment for you know, quite a while. And again, the Fed mandate is to drive CPI to 2%. That's why they keep increasing rates. They haven't been able to do that, but eventually, you know, that's the mandate. So I think a lot of districts that have struggled under what would be, you know, a very low CPI are going to go to the 5% to get a little relief.
Okay. All right, so for purposes of just putting something on our agenda for next month, I think what I'm hearing, are we hearing the 3% and hold steady combo as what we'll notice?
Sure.
And obviously,
We're not
a
dedicated
tax,
to it, right?
yeah.
Right.
So I think that's kind of the balance. Okay, so that's what we'll put on our agenda for December. As James said, you know, we're not statutorily required to post it since we're not going above that number, but we do want to make sure everybody and anyone who wants to speak can. You know, even though we're not required to do so. So that's what we'll go ahead and do. Okay, thank you on that. We would now be in line for our clerk's report, and I'll keep that. James going to give me back powers. Nicole sadly is not here, and we don't have minutes to approve. I will read though from her.
Are we just missing James?
James can leave if he likes. Thank you.
Thank you.
Thanks, James.
Enjoy your
Good night,
evening.
everybody. Take care. Good night.
Earlier today, I received the following message. I have to resign from the township. The kids are having significant health and mental health issues. Nothing like threatening, but they'll need to take, but it's taking a toll.
Nicole's resigning.
Yeah. So we will her resignation. That means that we have to fill the appointment. You know, on the record, I want to thank Nicole for a year and a half of work. I appreciated her new ideas and her excitement about the role. You know, I was hoping to work with her for 4 whole years. And life times gets in the way, and I completely understand your family and your health comes first.
Can we accommodate, can we make an accommodation?
We have been in plenty of discussions. So at this point, I'm not going to.
We've tried.
And the staff has been extremely helpful in providing those accommodations, and helping. So thank you to the staff for really jumping in during this period.
She was a champ at the annual town meeting.
Yeah.
Absolutely.
It was.
So I hope that we can find someone who's even, a bit as, devoted and excited about the role in civic engagement issue. We have 60 days in which to appoint someone. As with our open trustee role, that we filled last year, I intend to send out a open application. It allows for any residents to throw their name in and discuss with them as is, and then I'll present a name to the board as the appointment. That it is a supervisor's appointment, but happy to have your advice.
Should we get some input from the citizens? League?
That is the plan. I will intend to send to the Citizens League, as well as the local, any civic organizations I can think of. But do obviously spread it out widely, and I'm sure Julie will as well.
What is Virginia's daughter's name?
Hmm?
The Citizen League, she was maybe our secretary or treasurer. She's a young lady, and her mom is involved too.
I know who you're talking about, yeah.
Oh, my God.
That's a good option, but but I don't want to have that, anybody who applies will be considered, yeah.
Are we gonna not have minutes for a couple of months then? Is she gonna catch up with herself or not?
I do not know,
Okay.
but we wish her well, and thank her again, for her work. So, we do not have minutes to approve at this time. All the videos though are up, for all those, who are interested. We went one better than minutes. You've got a verbatim record, so go for it. And I have suggested we might want to simply throw those through, a transcription service. And that would meet our statutory requirements.
I think that will be a lot easier.
Right.
Honestly, between me and Julie in the office, minutes are really daunting, and to try to go back to
Right,
do it.
At least in this catch-up period.
Yeah, it's
That's a real
there's a lot of stuff going on.
so, and there are electronic options now, which are very easy. All right, we're now in line for the assessor's report. Assessor Churchwell.
Yes, hello, everybody. As probably most of you have heard, the tax bills came out today. I'm sorry James left before I got to relieve his anxiety a little bit by letting him know they're out. They're online, they are payable now. The hard copies will not come out for a couple weeks, just because it takes a lot longer to print 1.8 million bills than it does to post the information online. So the site was, I think, overwhelmed today because for several hours you could get to the assessor's website, but you couldn't get past point A. But the site never broke down, but we did have, calls from people saying, I can't get in, is something wrong? And the answer was, we think it's just everybody in the world or everybody in Cook County has been waiting for this moment, and you're all trying to get on at once and it'll sort itself out. And it seemed as to me, I looked this evening before the meeting, and I was able to get in with no trouble. So it wasn't, I don't think it was a systemic site problem that it's going to last. It'll take a while for people to get it done. I think more people were just relieved to know it was over and they could quit waiting for the shoe to drop. Now they know what it is anyway. They know how heavy and how much it hurt their foot. And that's about it. I wanted just to mention about as well, Gail covered the outreach event that took place in late October, but I wanted to mention one point about it, since we are moving every district, we are moving every which way we possibly could from where we've been We have been in Cook County Commissioner Larry Suffredin's district. We are now moving to Scott Britton's district. We will be attached to Northfield Township, Palatine Township, Wheeling Township, and the Barrington Township that is in New Trier Township, instead of having been with Evanston and Rogers Park. So we are going to be the only, lakeshore community now in our new county district, which got an awful lot bigger. And the Board of Review districts, we had for several years, past decade, well, not decade, but 10 years or more worth of time, we had the benefit of having two commissioners, because Mike Cabinargi was strictly Wilmette, which was carved out of let's put it this way, back in the early 2000s and before then, there had only been two Board of Review districts in all of Cook County. And along the way, it was just decided that the population was too big. Two people couldn't handle it, two staffs couldn't handle it. So they carved it up into three pieces instead. And we got the benefit of that by having Mike Cabinargi in Wilmette, and then another commissioner, Dan Patlak, and then last year Tammy Went, covering all of the other towns all the other villages that are in New Trier Township, which meant that our residents got the benefit of an awful lot of outreach events, from two, because they started out with each of them doing one. By the time they were finished and rolling in 2019, before the pandemic began, we were up to 5, because Dan did 3 and Mike did 2. And so residents had tons of opportunity to go talk to Board of Review personnel and learn about that part of the process. I am hoping, after I am able to meet and talk to our new commissioner, Samantha Steele, that we will at least be able to have 2 next year, one north and one south, because I think although the event in October was extremely well attended, but it was attended almost exclusively by Wilmette residents, due to the fact that I really think a lot of people never grasped the fact that they could now go to this event. This is Glencoe and Winnetka just didn't go to Wilmette for that event. And I would very much like to see, an expanded format again, if maybe, Winnetka Village Hall or something like that, where the bulk, or not the bulk, because Wilmette's the biggest single village, but where the bulk of the geography anyway, where people will come to the events. And that's just something I will talk to her about, and hopefully it will transpire. My other problem with that particular event in October was that I felt that the staff there was just sort of entirely pushing, let us, file tonight and you'll be all set, even though they're not open yet. And that's not quite the slant I would like to see on it, because if the residents just let the board select comps for them, in our opinion, Len's and my opinion, very strongly, that's not the best case they can make. And so I made that point when I was speaking, that, our function is to work. We work for New Trier Township. We do not work for the 1.8 million residents of Cook County at all. We only work for the ones here. And that we're very happy to do everything we can to help them, and we have no constraints on what we're willing to do, as long as it's legal, to help them do that. And the board will, they simply, again, they don't have the time any more than the county does to do deep dives or comparative analyses of anything. They look at comps and they decide whether an appeal is justified or not, and that's it. We do sales analyses and comparative sales analyses, and just anything we can think of that will help a taxpayer or resident make a case for why they need a reduction. And this is based on the fact that this is where we live. We know these houses, we know the areas. And if somebody says, I've lived in my house. One woman said several years ago when she got a very large assessment, she said, I did redo my countertops in 1992. Is that the reason my assessment went up so much? And I said, I really don't think so. And that is a problem for people on paper. You know, two houses can look exactly alike on paper, but one of them was updated last week and the other one hasn't been updated for 30 years. And they should not be assessed at the same value. And nobody in the county can see that. We can try to find a way at least to get that point across, and we do. So again, we try to be really sensitive to getting across to the residents the idea that the county has one job to do and we have another job to do, and ours is entirely on their behalf and not on the county's behalf. So that said, you all will be getting a written report later tonight. I simply didn't have time to finish it up because I have the statistics for the past 2 quarters ready finally as far as they are, and then just a written report to go with it. And aside from that, I don't think there is anything else. Oh yes, there was one other thing. It is in the written report as well. I'm not even sure I can remember what it is now. No, I can't. You'll have to wait for the written report and be excited and read it then. So I am done.
Thank you, Jen.
Thank you.
Thank you.
Is there any public comments? Seeing none, committee liaison reports, starting with mental health funding oversight.
In the interest of time, I'll just let you know that we have our last funding hearing coming up on the 28th, and then we will move into deliberations in December.
Thank you. Life stages funding.
And so we have our first round of presentations tomorrow. Alliance for Early Childhood, Career Resource Center, Legal Aid, and GYS will be presenting tomorrow. Then the next one is November 22nd. And last round will be November 30th. The YO is presenting on Tuesday, November 22nd at 7:30.
Thank you. Disability support funding.
Before I get to my committee, I was just curious, when do we intend to address the youth organizations that we had the special meeting?
During the discussion of funding.
That's not till then.
I don't have any other things for
Okay.
us to act on
One-
for that.
Right.
The only other thing that I wanted to add was that if anyone is interested in attending on Wednesday, December 7th, is when my committee will be discussing the recommendations for funding, including the youth organization. So that's Wednesday, December 7th at 6:30.
Thank you.
We actually have our last hearings on Thursday night. We've already had 2 sessions and the last one's Thursday night. I'll bring it up now, it's gonna come up more, but the direction the committee is going these days is there's a disagreement between funding organizations who have very few township residents, if any, and organizations which have members who were Nutria Township residents, but who have subsequently moved out of the township. And so there's a philosophical debate going on as to how do we fund those particular organizations? And the ones that don't service too many, I'll leave that aside for the moment, but the idea of people moving out of the township, I took the position, I just said it was my own position, not the board position, that if they still have family members in the township, and those family members are still paying taxes, then we should provide for those particular agencies. But not everybody agrees with my opinion on that. And so I'm just kind of giving the board a forewarning that that's what's coming, because when I said earlier that I keep hearing that many of the programs are going to be cut, a lot of it has to do with the 2 topics that I just raised.
Is this in reference to like to Scylla's?
It,
To like living situations for?
not
okay.
necessarily, like CEL is completely out of the township. But they do provide some township residents, but not necessarily in proportion to the funding.
Mhm.
There's another one, I can't think of the name right now, but, sometimes we have funded agencies where we had no participation because they were an emergency. Like Harbor, I think, it used to be that way. So it's more in the context of if they don't have mutual residents currently, are they entitled to our funding?
Mhm.
And where do we draw the line?
Right.
So that's really where the discussion's going. But there's some people that feel that if they don't have any mutual township residents, they shouldn't get any funding, period. And then there's the other school that figures, well, if we funded them for 25 years, we'll just continue to keep funding them. So, that's kind of, but there is a philosophical argument going on right now.
Right.
And I know it's gonna come to a head at the board level when it comes to funding, but the general consensus is that many of the existing agencies are gonna get their funds cut. And as I was alluding to earlier, if they get their funds cut, then we're gonna have that much more money in our coffers. And you say we're not even close, but as more money sits in our coffers and we make more money in interest, we're gonna get close to that line again, but we'll deal with that at the time. I really want to bring up the point of this idea of who do we fund and who we don't fund relative to whether they're not in the community.
And I would certainly ask that as you guys get into your discussion meetings, you refer back to the past, the guidelines that were adopted by this board. But then the question I think that is going to be outstanding is what is a township resident? For those who are, because we do have a lack of housing in this area. So that'll be, I think, something that is gonna be a matter of interpretation that might not be covered by the guidelines. It might have to be something we address at the board. Thank you. Pure jury, and I saw Brian's report.
Very, very concerning, 3 months in a row without any new cases, so I've been racking my brain on what more we can do, and I have an idea, and I want to run it by you folks. I think it's a decent idea. Brian and I, of course, went to all the police departments, and everybody, was very interested and very complimentary of the program, and they all promised they're gonna send us cases. Nothing has really happened, to affirm those representations that were made to us. I suggest that after the first of the year, Brian and I attempt going to the schools, the Fair High School, the other high schools in the township, and the junior high schools, because I think a lot of our cases have originated in the schools. And the schools, a lot of times, are handling these on their own. They're not even getting the police involved. I think we should make an awareness of our program known directly to the schools and see if that will in turn result in an uptick of cases. So it'll be incumbent on us to find out who the contact people are and to set up those appointments. But I'd start out with the 4 high schools, and then I would expand our presentations to the junior highs as well.
That makes sense.
Does that sound like a
It
reasonable?
does, and Julie
Oh,
should have those contacts for you.
My reservation is that, and I've seen that a lot of reservations tonight. My reservation on that one is, that's ultimately a police matter for the police to make a decision. So I'm not sure that going to the school makes sense in the context of, that's a police decision. So what are you gonna do? Have the principal of New Trier call the next police department and say, we think this should go to the jury?
If we let the schools know what we've done and what we can do, and we talk to them about the fact we think that you're keeping a lot of these cases in-house, not even sending to the police, we want you to be aware of what the peer jury program is, what we've done, what we can do. And we want you to consider, not bypassing the police, but making a beeline, for these cases to maybe be adjudicated by peer jury by involving the local officer. They have to come from the police department. They can't come directly from the school to us. But I think a lot of schools, and this is what Wilmette was telling us when Gail and I and Brian met with them, that a lot of the schools are trying to resolve these things internally and not even getting the police involved. But if the school knew what the outcome might be and what we can do for the offenders and for their family, then we may be able to get some of these schools to say, hey, as long as we know this is gonna go to peer jury, let's give them a chance. I mean, we've got to try to make sure everyone in the community that potentially can be a resource for us understands what it is that we do. And that we are open for business and we are very anxious to try to help them with behavioral issues.
Well, it
No
may even
problem.
be a matter of putting the right person or people at the police departments in front of the right person or people at the schools and, you know, reconnecting those as community resources with one another and you saying, and this is how we can help at the township. And, you know, making sure, you know, because I can imagine that there is a sense of trying to keep things out of, you know, also people permanent records. You know, not having to go to the police. But if you, you know, kind of, you know, make those connections and say, you know, we're not trying to get somebody, you know, thrown in jail. We're trying to, you know, help, you know, to enroll citizens. So I think that that's a really creative, you know, thought process. You know,
I don't think we have any of those.
No, yes.
But by the same token, if the schools are trying to resolve it themselves, then what they're saying is we don't want police involvement. And what you're arguing is by necessity, there would be police involvement because referral has come to the police. It'd be a different scenario if you said to the schools, we're offering the schools pure jury. But to start telling them to tell the police to use pure jury for resolutions of disputes within their own community, I think it's a stretch. And we know the history of New Trier High School, and New Trier High School doesn't particularly accept very much input from anybody.
Freshman
they-
campuses has been very good for our peer jury program. The freshman campus has a pipeline. We haven't gotten cases from them. What the schools need to hear is that you're not really gonna involve the police. There's simply an intermediary to get the case to peer jury. But this is what we can do. We wanna know what you're doing with your cases. Why are you keeping them internal? What are your concerns about letting us handle it or the police handle it? And try to alleviate those concerns and just, it's all about increasing awareness. The
Absolutely.
more entities that know what we have here, the better the pipeline might be.
No question, but Elliot, if the schools are trying to keep it out of the police realm, even them saying, well, we're okay with it going to peer jury, there's still a police involvement in that. And that's what they're trying to avoid. So I don't know.
But they're trying to avoid a record. That's the issue.
Well,
And if
there
you're
is a record, but
if
there is a
you're
record.
excluding-
I think there
Not
isn't
the
a record.
juvenile record.
There's no record of peer jury.
You're
Well,
under
it's
the
not-
Juvenile Courts
It's
Act.
not a record, but they have, it's noted in their file, they have to, every time they have someone come through the police department, they have to make records of it. It may not be on the individual record, but there is records of it. And that's, I think, what a lot of people are trying to avoid. So more power to you. Go out and start your program. I'm sorry it's not more funded, but I think you're kind of playing both sides against the middle.
Hey, let us know how it goes.
Okay.
And we'll go from there. Just find out what the concerns are. Staff reports, we've received staff reports from our township administrator, community services administrator, general assistance administrator, outreach communications director, and community partnerships coordinator. Is there anything anyone would like to pull for discussion?
I just have something to say about mine. So there, as everybody knows, have been several repairs on this building. Since I have been administrator, I do have a working relationship with, his name is Rocky Macias. He is the person who fixed the structure downstairs. He came and he did a whole, basically overview. We have some water damage in this back room here that is getting increasingly worse. There's some masonry issues and some tuck pointing issues. Now, I just had the roof survey done, which that was fine, but obviously the building is old. So he gave me some breakdowns, which was pretty late today, so I'll present them. Me and Gail will talk about them, but I can email them to you guys. These are just his suggestions before we get even more water damage coming down. He does a great job. He's really professional.
Is he from Get Well? Is that what that is?
He's from he used to work with Get Well, but now he has another company himself. He recently moved to Kenilworth so he could be closer to the township because he has a lot of business here. like I said, he's really responsive. He comes very quickly. And I like that about a quick vendor because I have issues with a lot of people getting back to me. So the quicker the better. We've had a lot of our inspections done, our elevator slash fire inspection has been done, our fire extinguisher inspections have been done, our sprinkler inspections have been done. So just getting everything up to date and having everything good on the record.
Oh, thank you. I do want to point a few things out. The turkey giveaway for Thanksgiving is on Monday, November 21st, so this Monday. If you are interested in giving an hour, it's a lot of fun. It's also a nice workout. You should for turkeys, you know, Lipton. And a good company. I've been grateful to be able to do that the last few years, but sadly I'm out of town this year. And then the scouting committee groups provide harvest baskets, which are just amazing. And
Yeah, what time is that and where?
what is our timing?
We're at the Presbyterian from 10 a.m. until 2, but when we're there, we're normally there at about 8:45 because Grand brings in all of the produce and everything like that. It takes some setup.
Mhm. And the meals come from Jewel. So for community members who want to donate, they can donate when they check out at Jewel on Green Bay. Each Jewel has their own beneficiary. And we will have, and Larisha is gonna stay back and speak, right?
Yes.
Yeah. So we do get people still come in during those days.
Winnetka Presbyterian's one on Willow, right? Willow
Yeah,
Presbyterian.
that's
Yeah, where we've had it the last few years, and they've been amazing partners to the township. That circle drive is perfect for these,
Mhm.
so, and just fabulous people all around. And then I also wanted to point out, on Steve's report, that we've added the 4 p.m. time slot, for passports for families, who wanted to have an after-school option, so I'm really excited about that. That was the purpose of having him have an afternoon start was really to increase those afternoon slots.
We've started emailing everybody who comes in for a passport slot because I had somebody last week that went back home 3 times for their passport slot. We try to give them all of the information, but the truth is that we just cannot push the time if we're having people every hour. So we've just been trying to give people as much information as we can.
Yep.
Especially people who are bringing kids straight from school. So we do send out guidelines, we do give them the link to the website, and we have everything that they need to bring on there.
Absolutely. Yeah, definitely smart. All right. Any continuing business? Seeing none, any new business? Seeing none, verification of claims, trustee Moser.
I moved to. What we do, verify these
Yes,
days? or
There,
Verify the payroll for October 2022. Amount unknown.
is there a second?
Second.
Any discussion about payroll, which has not changed? Seeing none, Madam Deputy Clerk, call the roll.
Supervisor Eisenberg,
Yes,
trustee Casal McNally.
Yes.
Trustee Robin.
Yes.
Trustee Moser.
Yes.
Trustee Rubin.
Yes.
payroll is verified, and the town fund, trustee Moser?
Verifications, there's no date on it. So. You see that? It says counting, it doesn't take what period of time.
Oh, so, what do you mean? What are you looking? So I'm looking here and witness wherefore we, the members, have set in our hands on November 15th.
Yeah,
So then referring to the board packet.
yeah, but
Well, they
the
used to be,
payroll was October of 22.
Right,
But on the town fund, what do we verify?
through October 31, 2022 is what you've received.
Okay.
Yep.
I think that should be added to the.
That's a good.
document.
Okay, one sec.
So I moved to verify the town fund expenditure for October of 2022.
Second.
Any discussion? Seeing none, please call the roll.
Supervisor Eisenberg,
Yes,
Trustee Patel McNally.
Yes.
Trustee Robin.
Yes.
Trustee Moser.
Yes.
Trustee Rubin.
Yes.
Gail, are you circulating?
I am, yeah, they're attached, so I'm doing one. Let me all start over here. We'll now entertain a motion to adjourn.
So moved.
Is there a second?
Second.
All those in favor, please say aye.
Aye.
Any opposed? We are now adjourned. Thank you.